PayPal recently dropped their third quarter earnings, hitting another home run, but interestingly, their stock price dropped down after that. Since then, with all the election drama, we've seen the price take off. Is PayPal still a buy right now? Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. We are in the midst of a really chaotic week with election drama and pandemic infection numbers increasing around the world. Yet, all at the same time, we're seeing stocks, especially tech stocks, like booming. It'll be very interesting to see how this works out. But all that to say, keep the drama in mind when thinking about your long-term strategy. Don't get too caught up in, oh my gosh, prices are going up higher, I better buy in now, because we don't really know what's actually going to happen with the election or with the pandemic. And just remember, slow and steady wins the race. Dollar cost averaging tends to work out pretty well in the end. About 3 months back, I did a video on PayPal, who they are, what they do, a little bit about how they've grown in their history and things like that. If you haven't seen that yet, check it out up here if you're interested. But today we wanted to take a look at third quarter earnings and share a little bit about the direction PayPal may be going into the future, as well as my thoughts on whether or not the stock is a buy right now. At the time of filming of the last video, the stock price was about 175. Since then, it's gone through some ups and downs. And this morning at market close, because I'm in Japan, at market close, it was like 215 or something. So it's gone up a lot. So is it like, did I make a bad call? Where are we sitting with this stock? So we're gonna take a look at what we learned in the earnings report, as well as some of the other news going on. If you're not super familiar with PayPal, it's been around for a long time, and in 2015 it split off from eBay. It used to be a part of eBay. And the reason it was able to gain that kind of first mover advantage is because buying on the internet wasn't something a lot of people were really used to at the time. And so PayPal, being the representative of the buyer and the seller at the same time, conveniently netting it more income, also was able to filter out fraud and figure out kind of like the risk levels of different buyers and sellers and stuff like that. And so that's continued to be their advantage. I used to use them a lot when I did a lot of wholesale importing from China, because I knew that PayPal would be willing to fight for me if I sent thousands of dollars and never ever got anything. And because it represents both sides of the equation, it can put together really high resolution risk profiles and buying and purchase profiles of the buyers and sellers, or shops or merchants, and therefore figure out, can we offer a loan to this company? Because they seem to be really good at managing their money, maybe we can make even more money off them. Or on the flip side, maybe we shouldn't be working with this person anymore because they never pay their bills. So having all of that data on all of the buyers and sellers has given PayPal a really good position as one of the first movers moving into kind of this digital shopping, digital currency, and slowly shifting into maybe Bitcoin and other digital currencies going into the future. In recent years, we've seen the rise of Square, who is preferred by a lot of people. We're also seeing PayPal answer back with Venmo and loads of other services like Apple Pay. And it seems like here in Japan, like every company has their own whatever pay thing going on, and it's just getting out of hand. But PayPal has really solidified that first mover advantage. We did see electronic payments surpass cash payments a couple of years ago. Like I think it was late 2017 or early 2018. And so it's going to become more and more a part of our daily lives. Here in Japan, recently the government said, hey, anytime you use an electronic payment method, we're going to refund you 3 to 5% of your transaction fees. And so shopping at participating stores or merchants gave you a lower price, and therefore pushing kind of that really huge elderly demographic of Japan who was just like, no, cash only ever for life. Now a lot of them are starting to use other payment methods. So moving forward, I think it's safe to say that we're going to see fintech or financial tech growing and growing, and probably even like Cathie Wood from ARK Invest mentions that probably a lot of these are going to be replacing traditional banks, huge, big buildings where you go and put your card in a machine to get money out and stuff like that. Like those banks might be going away kind of in short order here and being replaced by fintech. So all that said, let's take a look at PayPal's third quarter report. And sure enough, PayPal is also benefiting from this growing transactions. They have this little chart here that shows that payment volume was up 38% to 247 billion just in this quarter alone. That's massive growth. And keep in mind that they're getting a portion of every single payment that goes through them. This works out to a revenue gain of 25% to 5.46 billion. And I think net revenues and total payment volume both experienced records for PayPal this quarter. We saw GAAP EPS landing at about 86 cents and non-GAAP EPS landing at about $1.07, which is a little bit down from last quarter, but still very much up year over year. Interestingly though, we did see a large drop in operating cash flows as shown here. One of the causes of this was a 1 million share repurchase, and we'll get into that and some of the other causes in a minute. We did also see the number of accounts increase significantly, though not as much as in the second quarter. That being said, the average transactions per account has jumped up recently, suggesting that the big load of people that signed up in the second quarter are now starting to get more used to using things like PayPal for their everyday transactions. Obviously, when things shut down in the second quarter, we saw a lot of people being like, oh, I need to pay for stuff online now. I guess PayPal is the way to do it. And a lot of vendors are kind of like, we prefer if you pay through PayPal for all the reasons mentioned earlier. And so we saw this big boom, but a lot of them weren't really using PayPal so much. But we're seeing that number jump up significantly this quarter, which is a good sign for PayPal. So they showed a 15.2 million account gain year over year, which is 55%. And they've projected overall for the whole of 2020, they're projecting a 30% gain in total payment volume, as well as a 20% gain in revenues year over year compared to the total of 2019. I mentioned Venmo earlier. Venmo is PayPal's digital wallet and social payment platform. We saw payment volume up 61% year over year on Venmo, which is a really good sign for them as well, and shows that they're not too far out of step with some of the other competition that are stepping in and threatening to take some of their space, which is a crucial sign showing us that they're not out of the race with people like Square who are stepping onto their territory and offering a more kind of like free social send money to your friends type platform, which PayPal wasn't really up until Venmo entered the scene. Management expects Venmo's annual revenues to hit 900 million by 2021, along with a turn over to profitability. This should be especially aided by the upcoming Venmo credit card, which has been on the horizon for a bit now. All that being said, this still makes up a very small part of the overall business. Let's take a quick look at the balance sheet and then the income statement, just to see if there are any red flags or things that we should look out for. First, we have the balance sheet, and I just wanted to highlight a couple of points for you here. Note the huge gain in assets, especially in short-term investments, loans, and receivables there. On the liability front, we see similar proportion size gains, but I don't think there are any huge alarm bells for companies growing as fast as PayPal seems to be growing. Moving on to the income statement, we have in the center there the 3 months ending September 30th of 2020 and then 2019. And then on the right, 9 months ended September 30th, 2020 and 2019. So you can compare just this quarter and then year to date for both years. Some noteworthy highlights for you include a similar expense to revenue ratio compared to last year, but we're seeing that they're pumping more into technology and development, which is always good to see. A juicy boost in the bottom line of the net income, surpassing 1 billion, which is big news. Looks like we're on pace to pull in even juicier profit margins than last year, thanks to PayPal's good timing on being in the right place at the right time, as far as being able to capitalize on pandemic-related market impacts. Looks like we're also on pace to pull in a higher EPS this year than last year, which is expected, I think. Taking a step back and looking at the stock price, we see an improving earnings per share and improving PE ratios simultaneously over where they were last quarter. PE ratios have come down a bit to the not much more rational but more understandable 86, as opposed to last video I think they were at 109. But one of the really surprising things I found when I was looking into the company that I kind of wasn't really expecting actually was that the percentage of PayPal shares held by institutions, that is like investment banks or funds, is 84% now. And so that goes to say there aren't a lot of individuals, retail investors holding the stock, and a huge percentage of them are owned by Wall Street or investment funds or things like that. And so that's not necessarily like a scary thing or a bad thing, but what we can see is that when things are in vogue, it looks really good and the stock price can rise really like loftily, really easily, like we've seen in the last quarter. But at the same time, when it goes out of vogue and Wall Street's just kind of like, we're done with PayPal, we might see a similar decrease in the price. It's not necessarily a red flag, it's just something for you to know if you're considering becoming an owner of PayPal stock. I mentioned Cathie Wood of ARK Invest, who a lot of people really look up to figure out investing strategies for the future. Cathie Wood also went out recently and bought a bunch of PayPal shares, like a big bunch of PayPal shares, while also taking profit on Tesla shares. And her thesis is that stocks like PayPal and services like Venmo are going to eventually replace banks, and therefore we should get in while things are growing. And so, what do we think about PayPal? It's very clear that they're growing and they're capitalizing on current market conditions as well. But are we seeing that growth properly reflected in the stock price? I think the ball is really in your court on this. Last time I mentioned, I don't really like PayPal. I think it's a good stock as far as future growth prospects. I personally, as a small business guy, as an entrepreneur who's set up a bunch of different website businesses, don't like working with PayPal. And so I'm biased against it. And so it's easy for me to just be like, nope, never investing in PayPal. I hate them. Their service sucks. They always piss me off and they always make you jump through all these huge hoops just to get the money that customers have already paid you. And sometimes they'll even refund customers who are lying to them and take your money out of your bank account to refund it to them and stuff like that. I've just had too many negative experiences with PayPal to feel comfortable being like, I'm an owner of PayPal now, So I don't want my bias to impact you. If you look around on Reddit, you'll see every small business person and entrepreneur who has a net shop hates PayPal as well. Well, I want to put that out there for you, but we can push that aside and look at the stock objectively. I think PayPal is going to keep growing. I think their stock probably over the years, I'm not sure about short term. As I mentioned, the market is just really insane right now. And so I'm not going to tell you buy it now because tomorrow it's going to go up 5% again. We're hitting all-time highs at the moment. And really a lot of the built-in enthusiasm that's happened in the market in the last couple of days could change who's going to be the president. We don't really know, So I think investing a big chunk of your money right now could be quite risky. If you really like PayPal and you want to be in it long term, grab a couple shares here, grab a couple in a month, grab a couple in a couple of months, and just dollar cost into it. And I think you'll be good to go going into the future. I think this is going to be a company that just keeps growing. And we're really seeing that, especially in these tricky conditions right now. So that's my thoughts on PayPal. Again, I just dislike their service too much for me to be buying it. But I'm not necessarily saying, hey, you should not buy this because it's a bad investment. So looking forward to hearing your thoughts and your comments down below in the comment section. Talk to you guys soon and have a great day.